Many small business owners are not aware of tax deductions, what they can or can't write off, what they should or shouldn't be writing off, and it's costing them money. How much money are you leaving on the table is the big question. Now, I'm not an accountant. I'm not a tax attorney. I am not a tax advisor, but I'm an entrepreneur of 14 years and I've learned a thing or two. This is not tax advice, but you're going to want to listen. Let's get into the show. What's up, guys? My name is Chris with Warrior Consulting, and I work with entrepreneurs nationally and internationally to start, build, grow, and scale their business to the multi-million-dollar mark and beyond. And guess what? Today, I want to show you guys some love, specifically to those of you that love my content. And for anybody that loves my content and wants a free guide on how to scale as an entrepreneur, all you have to do is drop the word entrepreneur below, and I'm going to give you a free copy of my guide and video, Scaling Entrepreneur. I'm estimating around $10,000 worth of video and content I'm giving away this year, specifically just to you guys that like my content and comment with entrepreneur below to hook you guys up so you guys are winning too. So if you want this guide, drop entrepreneur below. I'm going to take care of the rest and hook you guys up. And with that said, let's get into the show. All right, guys, check it out. I need to reiterate that I am not an accountant. I am not a tax advisor. I am not a tax attorney. I am an entrepreneur of less than a decade and a half. However, I have learned a few things, and I have learned it from very wealthy, very rich, and professionals, CPAs, attorneys, tax advisors, financial planners. And what we have figured out is there's a system and there's a game to this, okay? Everybody knows the rich don't pay tax. A lot of entrepreneurs, a lot of business owners don't pay tax. But some business owners and entrepreneurs pay a lot of it. So I'm going to give you 3 tips today on how you could really look at your tax strategy and what you could do to capitalize on it. Okay, number 1, bookkeeping. What does that mean? Tracking your numbers, doing your numbers, understanding your numbers. There's a lot of different ways to do this, guys. You can outsource it to a bookkeeper. You can outsource it to a CPA. Or if you're strong with numbers, you could do it yourself if you enjoy it. Here I am at this point in my career. I'm beginning to interview someone that is going to become my CFO, meaning they are going to come into my companies. They are better at numbers than I am. They are a CPA by trade, and they want to do all of my numbers for me and all of my companies, which means it's the first time in my career I'm going to outsource it. So what does that mean? Yes, I have a CFO coming into the companies, but it means for 14 years I have been doing my own books. And the biggest mistake I ever made was not doing my own numbers, and I probably didn't do my own numbers. Like, I kind of just showed up to the accountant every year and was like, here you go, with everything astrew for probably the better part of a decade. So it's only been the past probably like 6-7 years that I've done my own numbers. And the best thing you could do if you're going to do that is do your numbers on a weekly basis, bare minimum on a bi-monthly basis, meaning twice a month. And what does that mean? That means track your revenues, track your expenses, and track them often. All right. Understand the money coming in, understand the money going out, understand the line items of where the money is going, coming in from, and where it's going. It's really that simple. You just have to figure out the system that you want to use. I myself personally go through all of my bank accounts twice a month. I look at everything, revenues coming in. I even count the cash coming in. I pay tax on cash coming in because I want my top line and bottom line to look big. And we know how to move things around like depreciation so you can avoid some taxability on it. But the point that I'm getting at is track all your revenues, look at all your bank accounts, write it all down. I write it down in a notebook and then I transfer it to an Excel book or a Google Docs book, okay? I think it's called Google Sheets, actually. You don't have to do it that way. There are programs like QuickBooks that people do prefer to use. However, I like the Excel format. That's what I'm very good with. I like pen and paper. That's what I'm very good with. That's what works with me. And until I outsource everything of my bookkeeping to a CFO, that's what I'm going to do. And that's what I recommend to you guys. If you're going to do your own books, have a system and do it. But the thing is, if you want to avoid tax penalty, definitely do your own books and get to know, or I should say, definitely have your numbers done and get to know those numbers. Number 2, have a CPA and or a financial planner. I have both, okay? And recently have both, all right? But the point is, if you really want to avoid tax problems, first, do your own books like we talked about, number 1. Number 2, have a good CPA. Have a CPA that you vibe with. Have a CPA that is what CPAs call aggressive or will work with you. The last thing you want is some tight-ass CPA that goes by the book and you have a huge tax bill coming in because they probably work for the IRS. The CPA's job is to harbor you from paying tax, to keep the money where it needs to be in the business, to your people, on your expenses, so you grow rather than having to pay abundance of tax. Having a constructive, aggressive CPA will get you much further in business and save you money in taxes, opposed to having some tight ass that wants to give you a big fat bill and send you on your merry way. All right, number 3 here, and the last piece of advice is this. Separate your personal and your business accounts and expenses. For instance, if you have a business account, run all your business expenses and revenues in that account. If you have personal accounts, which we all do, take your business revenues, if you have any, and expenses, and have them in this account. And don't muddy the water. Like, don't pay for personal things out of your business account. I mean, you can do it, but try not to. So when you're doing your books, you pull up your business account or accounts and go through your revenues and expenses. And when you pull up your personal account or accounts, you go through your revenues and your expenses and you keep them separate. The worst thing you could do is have one big account and then try to go through everything and decipher what is personal and what is business. And I know lots of people that do this, and usually they don't know not to. And I'm here to tell you that it'll make your whole life easier, especially if you're doing your books, not to do that. All right, guys, if you got any questions, comments, you want my feedback on what you're doing or not doing, or how to save on tax, and definitely on how to not pay more tax, drop a comment below, smash that like button, hit subscribe, hit that bell, make sure you know when I'm dropping this fire on how to save you money, guys, and I'll catch you next time.